Rivian shares rising as much as 13% today after the company reported production for the fourth quarter that beat the average analyst estimate. Joining us now with more, we've got Tom Narayan, RBC Capital Markets Global Autos Analyst. Tom, great to have you on. So Rivian, surprise to the upside, huge win for the stock here. Very different story for Tesla yesterday, missing on the street's average estimate, and then we saw a dip in the stock. What do you make of the bifurcation in those two stories?
I think it's both of those maybe overanalyzed a little too much. For the Rivian one, we knew, the company told us that Q4 was going to be stronger than Q3. They had a supply issue in Q3. The Q4 delivery number was actually consistent with their guidance. And with Tesla, yeah, it did come in a little below where consensus was. It actually was in line with our number. I think the buy side was expecting a stronger number. There was an expectation of a pull forward of demand ahead of Trump potentially cutting IRA credits and tariffs and all of that. Maybe that pull forward didn't happen as much as people thought, but it was still a solid number. So I think both of these numbers are probably creating stock reactions that are more magnified based on where both of the stocks were trading into those events, as opposed to something more structural to take away from them.
Yeah, it seems like Tesla's trimming some of the losses that it's seen yesterday here. Of course, there was a more outsized move that we had seen just after the print came out here. If you were to really kind of read through, though, the production and delivery numbers that came through from Tesla and to the best correlation, kind of draw some conclusion about what this means for margins going forward, especially as we've already come off of some of the most margin-friendly periods for the company. What do investors need to know, and what is the setup kind of going into this calendar year, especially knowing some of the roll-off of those EV credits that are anticipated?
Yeah, that's really the question that folks should focus on is where will margins go? I think Q4 margins, they may not be as good as Q3, to your point. Remember, Q3 benefited from deferred revenue from FSD. They said that's not going to come back in Q4, so folks should understand that there could be some headwinds. There was also discounting, right, to push some of those volumes. So, yeah, Q4 margins may come in below. I mean, whether or not folks like me lower their numbers, I think consensus is a little bit high into the earnings print. That could be some downward pressure into earnings. But as we look into this year, 2025, the big thing folks will be looking for on the volume front will be this new car, right? Whatever it's called, Model Q, Model 2. They say this will be completely different from the 3 and the Y for the first time in several years, and it could be priced below $30,000. Consumers say time and time again, the headwind of buying an EV is not charging infrastructure, it's pricing. If you come in with a lower price car that people like, maybe it looks like the Cybercab, something completely different, that could reinvigorate demand. That's, I think, what folks are looking at. And on the margin front, there could be some pressure there, but they also sell energy storage, which is coming in at higher margins. So that could be an important offset.
Well, Tom, it sounds like you're thinking about lowering your price target. Are you in the camp that the street is a little too optimistic?
No, I mean, my price target is where it is. It's based on kind of a conservative look of non-auto related things, to be quite honest. It's things like autonomy, FSD, robotaxi. My upside price target, my upside value is above where the stock is trading nicely. And that incorporates, something very reasonable for autonomy. I don't really value much for the humanoid robot, which could be significant. So I think folks looking at price targets a little too much may miss what's really happening here. The stock doesn't really trade on, price targets and things. It trades on narrative. It trades on headlines and things that are more tectonic and big picture in nature.